the question is, many buyers ask, should I wait to buy a home? And before I answer that, I want to, first let you know, here are the main questions that buyers are asking. And the main biggest, the question is, what are the biggest threats to our market right now, right? So before we determine, should you buy right now, let's understand, what are our biggest threats right now? And right now, it's the war that's happening as well as the inflation, right? And so these uncertainties have given pause to some buyers, creating an opportunity in the market for smart buyers. What does that mean? That means get off the fence. The opportunity for you to purchase a home right now is probably one of the better times at this time, because we are seeing some of the numbers where the market is starting to soften. And I wouldn't say soften, because we're still seeing multiple offers. However, what we are seeing, though, are a lot of buyers are kind of backing out, waiting to see what's going to happen with the war and things of that such. And they're listening to the news, and interest rates are up. And so they think that things are unaffordable. But it's not about unaffordable. Things are affordable. We just have to make sure we have the right information so you can make the right decision for you, right? So what does history tell us about war and the effect on the financial market? So I want you to just take a look here at this graph. I know it's a whole bunch of things, but this graph goes back almost 50 some years, talking about the war and the effect on the marketplace. And I want you to just tell me what you see that is common on this grid. And the hint is anything that's in the grayed box. What do you see after or during each war? Anybody can take a guess?
Real estate appears to be flat.
Appears to be flat. Absolutely. Now, can someone tell me what happens after the war? Based on the graph, what do you see with the market?
I see the market trending up after each war.
Yeah, absolutely. It explodes, right? Thank you very much. So with that, following every war, we have seen a huge run up in the market. And so what does history tell us about inflation and home prices? Well, real estate is one of the time-honored inflation hedges. It's a tangible asset that it holds their value, right, when inflation reigns. And unlike paper assets, more specifically, as prices rise, so does property values, right? So if you want to hedge inflation, well, purchase a home. So let's look at this. How does it hedge inflation? Well, if we look at the last 40 years, from 1970s to 2021, and the blue represents the inflation rate, green represents the home appreciation. And as you can see, for every decade, right, we're looking at the 1980s, inflation was and the appreciation was kind of neck and neck. 1990s, it was 4% versus 3%. The 2000s, still neck and neck. But 2020 or 2010, right, just under 5%. 2020, well, it just blew inflation out of the water. And look at 2021 as far as home appreciation. So if you want to hedge against inflation, you buy a home. So if you have cash and are expecting inflation, you want to think through where you can put your money so that it does not lose value, right? So housing is commonly looked at as a good inflation hedge, especially with interest rates so low. Well, some of you might be saying, well, interest rates are not as low. We're going to talk about that in a second here. But appreciation forecast for the next let's just go into 2022 as far as what is projected, right? So in 2020, they projected our inflation to be around our forecast for home appreciation around 6%. 2021, last year, was 15%. And actually in the Bay Area, we actually hit around 17, 18% of appreciation. And for 2022, they're projected to be just under 10% as far as appreciation, right? So let's take a look at the next 4 years. So right now, so if someone purchased a home, let's say in 2021 for 1.3 million, right? And just on average appreciation rate, and average appreciation rate here in the Silicon Valley is right around 7.6%. So if we just take just average, right, we're talking $575,000 in equity growth. That's equity, that's cash money in less than 10 years, right? So $500,000, that's exciting. So what we know of is as a fixed rate mortgage, what that allows you to do is maintain the biggest portion of your housing expense, right? So it's fixed. It's not going anywhere. Now, you may have property taxes that rise and other expenses, right, may increase, but your monthly housing payment remains the same. Now, here's what is fact. It's not the case if you are renting, all right? So we know for sure that rents are going up, and it's making it difficult for many renters, and they're moving out of the area. So here you go. Buying a home allows you to hedge inflation and keep your payments the same so you can budget and you own it. Versus the renter, you're paying their mortgage. Truly, in this market, you are paying their mortgage. So when is the best time to buy? Now. That's the best time to buy, is now, right now. So if we look at a 4-year forecast, right, and we look at the cumulative housing appreciation, right, going into 2026, optimists, and this is just what other professionals are saying based on a survey, is 62.5% are optimists. However, most of the panelists are about 43%, and pessimists, they're about 23, 24% as far as how the housing will appreciate in the next 4 years. So when we look at our 40-year chart, this is what I call the equity escalator. So if you look at the trend is what? It's going up, right? Yes, we have our dips. Yes, we have our economic downturns. However, if you look at the downturns, they're short-lived. On average, somewhere between 4 to 5 years. But when you look at the years that we're in recovery, we're talking 10 years or more for the most part. But the downturn is short-lived versus the long term of a recovery. And if you look at where we're at between 2019 and 2021, we're at 16%. So here again, when we go back from 1984 to current market, it doesn't matter what market we're in. My thing is, if you're a betting man or woman, you don't need to, I wouldn't put your bets here. I would say, look, get in where you can get in, because I can tell you this. We had in 2008, we had, I have an agent in our office who bought in Willow Glen. So he bought right at the peak of 2008, 2011. And that was the downturn. Look what happened. The market dipped, right? And most people lost their homes, unfortunately. However, he held on to his, right? And so he bought his for 1.6 million. and lost a whole bunch of money. I think he was even under $1 million at one point in time. But when the market picked up between 2012 and 2017, not only did he make up what he lost, but he actually gained or it doubled in price, right, from what he bought it for. So write this down and always remember this. 5 years owning your home, right, you will have made up to 50% of what you bought the property for in equity. 10 years or more, you are at 100% of what you bought the property for. So what that means is your property values double. Okay, so that's very important to understand, but this is the equity escalator. Get on it as you can, because the first step you miss, that step keeps rising, right? And we want to get you on this, the first step that comes your way so that you can appreciate the market that we're in. All right, so spring market 2022 forecast. We are in the midst of, sorry about that, we're in the midst of the most significant shift in how we live, work since the Industrial Revolution. What do I mean by that? Well, around the 1800s, we went from farms to factories. We went from factories to office buildings. And in 2020, we went from working in the office to working at home. So much has changed. And when we hear from, as far as the CEO, we are in the midst of the great reshuffling, right? This is where people are seeking more space. So what does that mean? That people are moving anywhere and everywhere, right? You're just not stuck in office. So what we're finding is buyers are picking up. So working from home is changing the way we think about where we live. So what that means is, how many people? Well, a lot. And it's increasing. So when we're talking 33% more homes sold in 2020 versus 2019, and 32% more homes sold in 2021 versus 2020. So both years, 2 years in a row, we're at 33% where people are moving and increasing the home ownership than the past 3 years, which is kind of not, I wouldn't say surprising, but COVID changed a lot for us and it's changed our marketplace. So when we look at the 4 factors that are driving our market in 2022, number one, we just talked about the reshuffling is doubling the demand, right? So the surge in the work from home population has rewritten the playbook for many home buying and rental decisions, from when and where to relocate to what people are looking for in their next residence. Okay, so number 2 is, second factor is supply, inventory, lowest ever. Okay, and so when we look at this graph, it shows that we're down 33%. But you might say, well, Don, how can we be down 33% when you just said we're selling 32% more homes? Well, it's like the toilet paper scenario, right? It wasn't like they weren't making any more toilet paper during the pandemic. They were making the toilet paper, they just couldn't make it fast enough. And it was being sold before it even hit the shelves, right? And that's what we're seeing. And the analogy is the same that applies to what's happening in real estate, okay? And the third driving factor is interest rates. They're low, but they are increasing. We'll go into that a little more. And the fourth is the stock market. It's off all-time highs, right? So we see the stock market kind of plunging a little bit. And so those are your 4 factors. It gives you a good idea of what's going on as far as based on this graph. And yeah, it's going up, but it's making that dip. And so that's what's happening with the NASDAQ and the stock market. So we really can't look at you know, basing or putting our money in the stock market, real estate is one of the most safest investments that one can make. Okay. So just to kind of give you a summation, appreciation, we're going to see it's going to slow down. Prices, though, I think is going to rise 10+%. Inventory, I will say that we will start seeing some increases as more sellers start to list their homes. And the rates, they're going to rise. The feds, look, they're going to try to curb the inflation. And so we do know that interest rates will increase. Some say as high as maybe 7%, but we'll have to see. But I know in the next month or two, we're going to see interest rates increase. So both prices and rates are going up. For buyers, it may feel and seem like it's a race to the finish. You might feel like you're in a 100-yard dash, and I get it, right? So what that means is we need to be prepared. We need to be able to be buyer ready. We need to be able to win this market is by getting buyer ready, approved to buy all cash. Some of you might think, a lot of you might think, well, what does that mean? What that means is we have investors, we have lending partners who can make you an all cash buyer. Because here's what we know. We know that all cash, hey, it's everything. That's what people are looking for. It's less trouble, less headache. All we know is that they got all cash, they can close. Cash is king. You heard the term, right? So we can position you to be an all cash buyer. And, you know, there's going to be some qualification, but let's talk more about that. But this is how we're going to get you to win in this type of market when you're competing against, because I have seen where buyers are getting beat out because of even putting down 50% as a down payment. They're still getting beat out to all cash buyers, right? So what we want to make sure of is that you are part of the conversation. You don't have to be the highest. However, being that you're all cash, they want to talk to you. And the fact that if they give us a call and they say, hey, Don, your buyer is all cash, can they increase their price point? Or here's where we're at. Where can your buyer fit these shoes as far as increasing their offer or these terms and close? Because we're talking about being able to close in 8 days. Well, what seller wouldn't want that, right? So absolutely, you're a winner if you have the first right of refusal. That's the best way I can put it, right? All cash gives you that. And you're already a winner because you're part of the conversation.